Welcome to TradeTheMBI.com. This is John's Reporters for the 7th of March. More wild activity here. We ended up, fairly positive after this nice giant up move. Of course, when you get that, and you can see from our daily snip, we're not overbought within that. We just had a complete reset of the oversold and started to climb. And then, of course, you had the resignation of Cohen, and that caused a major ripple all the way back down to the green ABM. One person, it's because of his connections to the power players that moved the market. And if you had any doubt who moves the market, it's very select firms that have control over how much comes and goes, and they drove that down. But again, ultimately, you've still got the overall issue. Will we see significant rate hikes, and will the continued growth of the economy drive forward, labor shortages or things like that? And, ultimately that's going to be the determining factor. But as we'll see in a little bit, we still have rising euro and that, and those are all going to bolster investment back into the S&P. So we've still moved quite a ways in general. So this isn't the end of the world, but the volatility, very nice. And that's just a function of the liquidity withdrawal. We saw a huge amount of retail investors flee the market out of the fear in February, because they're always late to the game and then they're always out at the wrong spot. It's the story of retail, but it also indicates that retail doesn't drive it. If that many people moved out of the market and we're still at this level, what does that tell you? Yeah, that tells you a lot. It means that they really aren't that significant. Likewise, NQ, much stronger. I mean, look at that. We had the S&P go all the way down to the green ABM. Didn't even create a blip on the NASDAQ. So, and here's what I was talking about, the euro continuing its climb. That's going to continue to drive. I mean, you're just forced to be in U.S. equities because it's so cheap. And flat line here for bonds. It should really break down, but everyone's waiting for the next rate increase, and until that happens, they're sort of like in a suspended animation. And oil continuing its peg back upwards. It's going to just be a slow haul. Again, with the ability for that increased supply, really puts a little bit of a turmoil. Now, obviously, there you have your break-even points, and you're going to trade slightly above that. But U.S. is going to be the largest producer of oil. That hasn't happened in forever. So that's going to make a huge impact going forward in gold. So, I mean, this is, again, gold rising. Gold is going to precursor the expectation for inflation. I think you're already seeing core inflation rising. You throw in the steel tariffs and aluminum, and you're going to have, again, upward wage pressures. And wage pressure really is what drives inflation more than most other things. The fact that you had all this QE and everyone expected inflation from that, but that didn't put actual pressure on prices to rise. It's not until people actually use that liquidity that was created. Most of it was just for banking purposes. Now you may actually see it incorporated in the economy. That is going to actually have the driving factor. And again, so many people just don't understand economics. It's really shocking after all these years that people still can't figure it out. I mean, I've been trying to point out how it works and some of the strategies that they've employed, but you really have to stay up on that to get a general sense of where things are. So this is a really compressed chart of the 5K, and I had to because I wanted to point out we had talked about positive extremes from back here when this started, and like I said, it was too early for the expectation of that retrace. But boy, didn't they take a singular event and it was interesting because it was right at the end of the day we started getting all of these sell signals with the cyan crossing above and spikes of orange until the last one, which created a really significant break down below the zone, as well as the steel dipping below cyan, and that was the singular gap. And then it produced a bit of a bullish sense, but you didn't have that until you had the orange dip right here. So even though you had the steel cross there, it was modest was enough to hold it for a little bit, but you didn't have that extra drive. What you did was you had that green dip below way down here, and that caused an immediate knee-jerk reaction. Of course, then it double bottomed there, but now you're producing the exact same buy setup right here, what, minus 25-ish with the rising shakeout, so we should expect that's going to at least put pressure right back up at the 27. So it's the early side of it, and we can start to increase this chart now. But we were posting these all day because there's still, even within these, beautiful ranges to the upside, then with the short signals. And then it's just a question of, how patient you are in waiting for moves that are going to retest at least, like, from a 50%, you're expecting to at least to the 23, two zones, and then eventually to the low at this particular point. And we kept making new lows, but then once the highs started to fall under flat, you expect to move at least to the 50%. At that point, you could evaluate. And again, you had additional buy signals right at the 50%, and that drove you to the 100% line right there. That's when we kept getting DOC spreads. We had a couple of orange pops here that didn't have a correlation with the steel because you had resets, which is what held that up and caused it to revisit the peak off this little buy. But then you ended up with the clear DOC spread with the orange above 13.5, and then a couple of back and forth spiders. That was a bullish one right here. You can see it real quick, goes fast, and you ended up with a quick little spike that headed back towards the highs. But then the steel breaking down below, cyan at the same time, green dipping below red, and doing it at one of the key thresholds. Is why we have these lines at the minus 7.5, minus 13.5, because they have significance. And because it's an aggregate from the algorithm readings, and boom, it continued going into the close of there, and then boom, just big gap down after the announcement for Cohen, and basically we're pretty much right at the beginnings of that move, and we'll just expand here as we're getting into the pre-market so it's easy to see. And that's just a beautiful way for them just to suck up stops. And likewise, I'm expecting that we would be gapped down for the open just to force people out. It usually works the best, particularly because all the ETFs and that have become so popular, you can't get in and out of that stuff until the pre-market opens and they start trading. So it's really a nice way to, nice little gap down is going to squeeze a lot of the both call buyers and make any of the shorts happy, because they'll cover, and that will drive price back up a bit. So a lot of good action. Also, we had the Bitcoin futures. We had the positive extremes from right back here. And that would be the drawdown to that. Now, there's several others in between that have already been filled in with this move right here. And that was taken care of right there. So the only one that's left is down at the 96 range. And you can see we're already still making new lows from the peak there. It was nice. You had a couple of series of ones here, but you had the steel reset on most of them. And that was able to hold things up. We weren't expecting a whole lot from that. It wasn't until you got this one where you ended up with the green crash below, cyan moving above both at the same time. And boom. Again, expecting the 50%. You had no new buy signals at that particular point. Orange caught in the continuation, and it did. It continued a little bit lower. And still doing that. No reset of the steel at this particular point. So still looking for a little bit lower on that one. That's the long and the short of it. Long video, I'm sorry, but sometimes when the information is there, we got to cover it all, make sure that we cover all the bases so that we know where we're at. I would expect that as we get towards that 27 here in the pre-market, it's very early in the morning Eastern time and that, so plenty of time before even the pre-market in America really even gets active. So we'll see how it plays out, and we'll post charts as necessary. Trade well.